Just keep in mind that you're trading in a market that is real, guys. So this market is made out of humans. Even if they're robots that are trading, the robots are made by humans, and the price incorporates human action after all. This is what you need to know, and this is what you need to understand at all stages of your trading. I will present you today with some concepts of support and resistance levels, and not only levels, but areas. You need to understand this is a huge market. The forex market is probably the largest market that somebody can trade in, and here I mean the most liquid, the most traders. So I think it's the largest market that one can trade in. So you need to understand some healthy principles, some logic fundamentals that are lying beneath the price action that you see on a chart. Support and resistance is basically like, it's something very simple, but it's working so good if you just treat it right. Okay, let's just get going. A little bit of disclaimer before we okay, let's start with our great subject for today. I told you, even if it seems like too simple, you need to understand that these concepts are really working in the market. You don't need to apply sophisticated analysis in order to make good trades, profitable trades. And remember, there's not a single trader that has like 100% of wins. You know, a trader has to lose.
I'm very interested in your approach. Let's look into the actual theory that you're going to be presenting, and we can make an interactive session towards the end of the webinar. What do you say?
What is support and resistance basically? So you will see that the price is on all kinds of charts that are making like highs and lows. Basically, the support and resistance are levels or areas, price levels or areas where most of the times the market sentiment shifts from, whether from bullish to bearish or from bearish to bullish. So basically, any local high or local low can be like a midterm high or midterm low. So basically, if you spot a good and a strong support or resistance, you can have a good trade setup, meaning you can have low risk and high reward potential, because we don't know 100% where the market will head when we enter into a trade. So guys, price action gives like strong support and resistance levels, right? These levels and areas are based on fundamentals that take into account the repetitive nature of human nature, okay? As I told you at the beginning, the prices are created by the human action. So if somebody makes a sell trade or a buy trade, it influences in a very low measure, of course, but altogether, the bears and the bulls are influencing the market. They're driving the markets. Okay. You have to use support and resistance to optimize the price and the timing for a trade. Yes. So support and resistance are used not only for price levels, but also for timing your trade. And I will show you how. Most of the times, it is recommended for you to establish an area of support and resistance. You know why? Because it's highly improbable for a price of a market that is so big, like, for example, the euro-dollar cross. You know, it is very impossible to just to move back or to retrace from a level, just from, you know, from one pip. You need to allow space, because There are a lot of traders in this market, and the market can slip for a few pips or 10 or 20 pips above or below the level that you're looking at. So just keep this in mind. Allow some space for support and resistance, and create areas of support and resistance, because have a lot to gain. Okay, and as probably most of you know, a level of support may become resistance once it's breached, or a level of resistance is automatically becoming a support once the price breaks through. Okay. I was thinking what to tell you before the webinar, what to include in this presentation, and after all, I came to the conclusion that my objective, my best thing to do here is to teach you the mindset. Okay, I do not have a holy grail. I cannot say that I know exactly where to place the support and resistance, and you'll make 100% accurate trades, profitable trades. No, but I hope that in this webinar I can teach you the mindset. I can teach you how you can find the best support and resistance. Okay, depending on the market you're trading in. Okay. I prepared here a slide that is a little bit interactive, in the hope that you will better understand how a market reverses. Okay, how it turns from bullish to bearish, or bearish to bullish. In this example, we have a price. It's the euro dollar. It's a 15-minute price chart, candlestick chart. Okay, and just follow me along, and you'll see that you will understand how the market is working. Okay, so this is a great example as how the bears are in control in the first half of in the first 2 days of this chart, and how bulls are taking control. So first, here the bulls are probably about 10% of the market, and the bears are 90%. Because you can see how fast and how brutal is the drop. Okay, there's no time for bulls to go in, and the very local lows are quickly broke and created new lows. Okay. What's happening next? You see, we have a little bit of retracement. Probably here we have something like 20% bulls and 80% bears in the market right now. How is this happening? Basically, a few shorts that were in the previous part of the market where the price dropped were covered. And what does a short cover mean? Basically, it means a long trade, right? Because you're short euro dollar. If you cover it, you go in and make actually a buy. So basically, you are contributing to a reversal of the market, to a correction of the market. Okay. And of course, there are probably a few longs that are new in the market. Some traders that believe that the price will rise from that point on. Okay, the next stage of this market, of this price action, is another drop. Okay, you can see basically how the market is breaching through the previous lows, right? And probably right now we are back in the 10%, 90% ratio between bulls and bears. Why? Because the trend, the descending trend is resuming. Okay, new bears enter the market that are driving the prices lower and creating new lows, and bulls are squeezed out. Have you heard of this term, to be like squeezed out? Short squeeze. Okay, and there's also a long squeeze, like the traders that have been long are basically stopped out. So what does this mean for the market? If a trader that is long is stopped out, basically he's stopping out his trade that stopped him out is contributing to the market falling, okay? Because if you're long and you're stopped out, you're creating a short trade actually. Okay, what's happening next? You see here probably we're gonna come back to 20-80 ratio between bulls and bears. The same as in the previous retracement. There are probably some new bulls and some late sellers, late bears that think that the trend is still down. Okay, but there is something that you have to consider in this chart. Actually, this chart has a lot to say, but it doesn't necessarily make the subject of support and resistance. There's a lot to say about this chart regarding the price action. So we will make another webinar, guys, with the price action, where I will give you more detailed description of this chart and how the shift between bears and bulls is created here. Okay, and now we're sticking strictly to our purpose of how to spot good support and resistance. And of course here I'm giving you all this because at this price area, in these levels, in these lows, there were some signals that the market will reverse, or there was a probability that the market reversed. Okay, we will never know for sure that it's going to reverse. And I'm presenting this to you because this happens in a support area. Basically, there is a shift between bears and bulls. Okay, the bulls will finally make the reversal. Okay, so in this stage there is probably 20-80 ratio between bulls and bears. Okay, and we're going back. This is a very interesting part of this market, of this price action. Why? Because we failed to create new lows. Okay, so this is the first point where you have to think that something is changed. Okay, probably maybe we won't have a reversal, meaning that we'll have a few tens of or hundreds of pips going up on euro dollar, but this part here, creating, not being able to create new lows, it proves to us that probably the ratio between bulls and bears here in this few hours or a day, or how much is there, is probably equilibrated, somewhere between 50-50%. Okay, so the 50% bulls here and 50% bears. There's a battle here. Okay. And having in mind the fact that we came from a short trend where the bears were in control, we might think that this trend may reverse. Okay, so actually, what happens here? There are more bulls coming into the market and more bears covering shorts because, of course, who was short from the beginning there, and made like maybe 100 pips. Maybe he thinks that, hey, why shouldn't I just take profit? Okay, so he's just covering his shorts. Okay, this means like actually more bulls. Okay. Okay, guys, what happens next? As I told you, we can frame the market here in a range. Okay, so the failure of not creating new lows gives us some very, very important information in this market. Okay, we can expect that at least the market will go sideways, or it might reverse. Okay, but there are lower chances for the market to create new lows in these conditions. Okay, so in these kind of markets, you always have to look for trade setups, for long trade setups. Okay, look, so here is a range. Okay, and now what happens? Do you see how do you see this candle right here that is breaking the resistance level? Let me see if I can highlighter. Okay, I guess you can see this, okay? Right here. You can see this, guys? Jakub?
Yes, we can see it.
I assume. Yes, okay. Because I need to highlight it because otherwise I think probably some people are having a hard time to follow me. So look, this is the first clue, number one here, the break of this resistance, okay? And as Jakub said, look, here we're moving from the first floor to the second floor. So basically, the ceiling becomes the floor now. Okay, you have to look for trade setups to go long. And this here is the second big clue that the market is basically the confirmation that the market has reversed. And probably in this stage, they're like somewhere around 70% of the traders that are bulls and 30% that are bears. Okay, they're always going to be bulls and bears in the market. Can't be just bulls, okay, or bears. So this is what I need you to understand, guys, how the market is shifting. You see, from here to here we have a downtrend. Now we have a range, and now we have an uptrend. Okay, and this here is a support area. Okay. So this is very important for you to understand how the market is shifting from downtrend to uptrend, okay? Great. Okay, let's move on. Whoop. Erase all drawings. Okay. Good. Okay. I will move forward because there's a lot of things that I want to tell you about in this presentation, and we're running out of time. For those of you who are rather new in the markets, what is support and what is resistance? A short description, right, and a short characterization. Like the support is a level or an area below which the current price will have difficulty in dropping. Okay, you'll always find a demand of you'll always find bulls that will want to go in the market in the support areas or at near the support levels. Okay, so you'll always have to expect some bull action in the support area. Keep in mind that always a support should be drawn below the price, the current price, okay, as you see here in these examples. And you can see here that we can have like dynamic support, like trend line, okay, which is not always at the same level, at the same price level. It moves along with the market. Basically, this is a trend line. Okay, you will also have a lot of times, and this is very important, horizontal support, which is a fixed support at a fixed price level, and you can have like a support offered by some indicators, like a group said. You can have a support offered by moving average, as you can see here in the third example. Okay. Moving on, the resistance basically is the mirror of the support. Okay, especially in the currency market, guys. Just try to understand the currency markets are a lot different than the equities, than the stocks. Why? Because currencies are moving up and down. Okay, it's not like a stock. This makes sense, right? Because if you're trading like the euro dollar, the euro cannot grow against the dollar like endless, right? It's a currency. It's not a stock. I hope this makes a point for you guys. So if you're trading forex, you need to understand this. Okay, you need to understand that if you put on a weekly chart, you'll probably see like a range, like a very large range. Okay, it's not like a stock. If you're looking on Tesla, let's say, you'll see like from 2005 a really exponential trend, like an exponential growth. You won't see that on the long term in Forex. Okay. And of course, the resistance, like it's the opposite of the support. Basically, you'll always have the price below the resistance. So whenever you draw a resistance on your charts, keep in mind that it has to be above the current market price. Okay, that's a resistance. A resistance is always above the current market price. Okay. Okay, I don't want to get you guys bored with the typical support and resistance. That's why in this webinar I will try to present you some things that probably you won't find very easy on the internet. Okay, and treat them very serious because they're things that work. They're actually working in your trading. Okay, first one. Try to find clusters in your analysis. What is a cluster? Well, a cluster basically is an area of support or resistance in which you can find several supports or resistances coming from different parts. Okay, I know Jakub is using very much in his trading the Fibonacci tool. Okay, look here we have an example. Where I used Fibonacci and also I used previous highs and lows to determine a horizontal support. Okay, clusters are basically more horizontal supports or resistances stuck in a very narrow range of a market. The narrower it is, the best for you, because you can always count on that area. Okay, like this one here. This is the Euro USD. This is a rather recent chart. It's from the late February, early March, probably a week and a half here. Okay, and look, we have a Fibonacci resistance here at 61.8 level. Oh, sorry about that. Okay, and we also have this high here, which acted as good resistance. So this area, guys, this area here is like this is a 12 pip range. This is a 12 pip range. A 12 pip range. This is a narrow range. Okay. This is good for you to establish a resistance area. Okay, I'm not saying that this area will resume the downtrend and you will make 1,000 pips. No, just be careful. Look, the proof is here. A resistance has the purpose to make the prices go down, or at least to have a ranging effect on the market. Okay, the market will have a sideways evolution. Okay, so guys, try to find clusters in the market. Okay, and not large. If you find the support or resistance within 100 pips, that's too much. Okay, try to find supports and resistance somewhere in 20 pips maybe. Okay, but be objective. Don't just draw two or three horizontal supports or resistances just to find clusters. No, just be reasonable, okay? Because you will suffer. you will have the most to suffer if you're drawing supports and resistance where they're not actually. Okay. Okay, let's just erase here my explanations and move forward.
Just maybe I could add something there.
Please.
In general, what people fail, based on my experience, is that they always see resistance level as the level for you to sell or go against the trend, or support as the level to buy. This is not necessarily the case. If you really look into market, you just showed in the previous example that you were giving an example. If you manage to understand the market from the supply and demand perspective, which is price action, you really can understand which direction the market is going to be looking into. Like as an example, in this very good example that you are sharing here, I look at this market, and I can tell you 100%, well, pretty much 100%, 99.9% that the next target in here was definitely a move towards the 23.6% Fibonacci retracement zone that you draw there. And if you don't believe me, just go ahead and share it on your chart and you'll see the result. The way, by the way, I think it's euro dollar chart. Yeah.
This is the euro dollar chart, yeah.
Euro dollar chart. If I zoom in, I can see that it's the 2nd of March. So go ahead and look at the 2nd, 4th of March, and you'll see which direction it's going to be really moving into, guys. You as the traders mostly. So one very important thing over there is not you trying to say, okay, I'm gonna sell, but for me, the way I look at it is that I would not sell there. I would look for the test of the support level because the trend is shifting. So I would look into the test of support level to buy, because the bears are losing their power, which is likely that they're going to try their one best shot in order to push the market lower as much as they can in order to exit their short entries. So whenever that happens, what you do is that's the main reason why you use the limit orders, because you get to define the trend, on which direction the trend is moving, and you go with the trend. Not like, okay, here is a resistance, I should sell, even if you are 100% sure. Like I told you, I would, in that level, or maybe even higher, I would aim to sell, but, well, how good would it be? Even if you are 99.9% sure. The thing is that you would be risking. Each time you go against the trend, whether with Fibonacci, whether with resistance level, moving average, or anything that you are doing, doesn't matter. Each time you go against the trend, you increase the risk, because the trend is your friend. That's the best word that I can share.
The thing here, guys, is, and this is another remark, basically what Yagub said, thank you Yagub for your intervention, is price action. Okay, when I was doing the presentation, I had a few slides, and I thought, look, this is a great subject for another webinar. There's so many great things to say about price action that I really wanted to share with you guys in another webinar.
Well, the first thing that catches my attention, why I say that it's likely that the market is going to be reversing backwards, at least a little bit, is actually the previous high that we have a kind of a pin bar there, which is almost touching the 61.8%. But when you go backwards and look on the previous waves that we have had, we can see that the previous resistance is actually breached above the one right on the 29 February, exactly that level.
You're talking about this one, right?
Exactly. That level has been breached above, and no matter whomever says what, if it is breached above, it means that it is not valid anymore. And the next level for me that I'm really looking into is the 1.0990 level, more or less. And it's because if you look even the previous 25th of February level, you can see the lowest low there, and also 23rd of the February from the chart that I'm seeing. So
you're talking about these lows, right?
Exactly. That's the level. So based on this, what we can expect is that the market is going to be touching 1.0990 level and reverse back to definitely to 38.2%, because that's the first support line that we have there. and probably in between the 38.2 and 23.6% Fibonacci retracement zone at 1.0899 level. You can see that there is a good support there as well. So if you look at it, what do you see? You see basically a level for you to short as well. But more important than that, you see a level for you to start longing, 1.0899 level for a level to start longing. And there you go. We have the
Yep.
1.0990 level triggered, and it should,
Yes.
the first level,
And look at it.
there you go.
Always remember, guys, there are news in the market. News are moving the markets, okay? News are moving the markets. If you're rather new in the markets, or even if you're experienced, probably it's better off to stay out of the markets when the NFP is coming out, when there's a central bank meeting.
Exactly.
This is
But
huge here. This move
if
is
you really
huge.
look at if you really look at it, how precise the analysis I just shared. It was a live analysis for here. 1.0890. I didn't even see the chart. I don't have indicators, no nothing, just pure price action. You look at it
Yes, that's
1.0990, and then you look at the 1.0899 level. I said, and it went a little, I think above it. It didn't trigger. Can you check the lowest low of that candle? It's this
09,
is 4
09,
pips,
03.
yeah, 4 pips difference from the level that I just gave. But nonetheless, this is the real price action that you really need to look into. The remaining part, I don't know, whomever says different kind of indicators. Adrian commented one amazing comment. I've seen traders that use so many indicators that they cannot see the price. Well, I've seen many of them. You don't need them. You don't need them, and I've
Yeah.
seen them all losing all they have. This is the
Yes,
beauty
and
about
many.
the market.
No, my opinion is, guys, keep your charts clean. All you need
Exactly.
is the price. All you need is the price. Don't get fooled. Don't get fooled. All you need is the price.
Hmm. So,
And
Adrian, sorry for disrupting so much. This is just my opinion personally. That's why I love supply and demand so much, support and resistance, in another way.
price action is great, Diego, but I just told you, price action is great. Price
Hmm.
action is probably the best tool that you can get in trading, not only Forex, but also equities and other stuff. So, we'll let you know, guys. We'll prepare a great material about price action. And price action basically is like, when somebody tells you that he's trading based on feeling. That's not feeling, that's price action. Because he's looking at the price and he says, this has a high probability of going up. Why? Because he knows the structure of the market. He's seen that, he saw that before, And he said, I had a feeling. No, you didn't have a feeling. You just had experience. You've seen that before, and you knew that there's a probability for the market to go up. This is price action. It's price action. It's not feeling,
And if you can even look into that level, you don't have 88%, but add 88% to your Fibonacci, you will see that when the market reversed, it was probably the 88% Fibonacci retracement zone that it reversed from. And these are amazing things. As you said, you don't really feel the market like the way you say, I have a feeling. No, you don't have a feeling. You can just, your brain subconsciously is recalling one of the events that you have had historically. And based on it, you're thinking, just there you go, 88% Fibonacci retracement zone. How amazing it is. To 50% it is that it's reversing to.
Here,
And
yes, this is the
exactly.
50.
So this is the beauty about the market. You have to feel it, but the way you feel it is not with like a love feeling. You get to feel it like subconscious confidence. It comes in. Yeah. You
Correct.
don't need to do things like reading checkpoints anymore, but you are so much used to that you can put your actions into subconscious move that can generate profitable entries for you, but as if you're consciously doing it. That's the final stage of being a professional trader, by the way. So let's move on to next point, Adrian. I stole some of your time.
Yes, let me share with the people my material here, Gob. I have so many things left to say, and we're out of time.
All right.
Okay, let's move on. Okay, we're done with the clusters. Okay, another important concept is the confluence. Okay, it's something similar with the cluster. It's just here in confluences you will find support or resistances like gathering support and resistances of more types. Okay, so it's a mixture of horizontal supports and trend lines supports and moving average supports, like this one, like this one here, like this example. Okay, look here. Wait. Oh, I have to share the presentation. Sorry, guys. Okay, now, sorry, I was talking about on the chart, and okay, can you see my presentation now?
Yes.
Okay, I guess you can see it. Okay, so this is what I was talking about, right? Look, you have the R1, the support here, which turns into resistance. R2 here, you see here, and you have the moving average of 100 periods. This is a 1 hour chart, by the way. And you also have this trend line. You see, all these resistances are here, are stuck here. You see, so there's a resistance in price and time. Okay, this offers a resistance in price and time. This is also what you need to look for. This is a strong area of resistance here. Okay. This is what you need to look for. If you're using averages and horizontal supports and resistances and the trend line, there you go. Sometimes from time to time you can find a very strong area where a short setup or a long setup can be formed. Okay. Okay, let's erase this. Moving forward, okay. Some other tips on how to spot the best support and resistance. Probably you haven't thought of this, but the hour of the day when you make a trade, it is very important. You know why? Because there are a lot of traders who trade in certain hours of the day. I even have an analysis that I can share with you guys. Look here. So I downloaded 1 year of hourly candles, okay, and this is what came up. Let me just explain what I did here. So basically this is the hour, okay, the hour of the day from midnight till midnight, okay. And look here, at 9, 10 and 11 o'clock, this is the amount of this is the percentage of days within a year that was created the daily high or low. The blue is the daily high and the red is the daily low. So there is between the hour 9 and 11 and 12 actually, it's so hour 9, 10, 11. Look here. You know what this is? This is the London Open, okay? This is the London Open, and this here is the New York Open here, and a few hours later.
It's the GMT plus
so
2 for people who are wondering what it is, the time zones.
Yes, that's GMT plus 2, guys. That's GMT plus 2. So basically this is the London Open, okay, here, and this is the New York Open. So can you see the pattern here? Can you see? This is for cable, by the way. This is for cable, not for Eurodollar. This is for cable. And look here, this is a great stuff here. Look here, in 8.9% of the cases, the daily low was created at 12 o'clock. Isn't this strange? No, it's not. You know why? You know why? Because I thought of it. It's when there are news over the weekend, okay, or when there's an NFP or some news at the end of 1 week, then you will usually there are high chances to see a daily low forming in GBP USD on Monday morning. This is great stuff, isn't it? You wouldn't think of this until you plot this. Okay? Okay, there are a lot more analysis like this which will help you.
It also shows how much the market is evolving. Like, if you were to show this to me probably in 2005 or 2006, this number would have been much different. Back then, the daily low, the daily low and daily high would fall between the European and the US market openings, and you would have seen a lot of strategies like London breakout, etc. happening happening during the US opening, especially. Now it doesn't really happen that much.
It's clear that the markets are changing. The markets are changing. We need to be always aware of this thing. Okay, that's why you always need to actively analyze the markets. Okay, and that's why I have not seen an expert advisor, a robot that is working like for 5 years, because it's logic. The market is changing. Okay, we had a depression. We had the investors they're dominated by fear and greed. You always have another context, in which the markets are evolving.
But
okay, let's move forward.
Is the fundamentals of the market, the same thing. All parts of the market that makes up the market, human element, it's always there. You just need to see it, and the thing that you are sharing today, I feel so much emotional about it that I'm diving in every now and then with you. It just is amazing how simple stuff can make you make hundreds of pips a day, but if you start ignoring it, it can cost you pretty much your whole equity.
Yes, I know. I've experienced losses. I've experienced tremendous amounts of losses because I have not applied what I was aware of. Easy as that. I was just greedy or fearful,
Mm-hmm.
I know how I lost, and I'm still losing based on that. So I'm a tough learner, Don't be like me. Okay, so what I'm trying to say with the hour of the day, guys, is that if you make trades, entries, in some certain hours of the day, your chances of getting a better risk-reward ratio and profitable trades is higher. You saw what I just showed you. Okay, it's statistics. But you need to do this not just for a day and it's not working. Okay, if you're entering one day and the daily low is not forming at 9 a.m., that doesn't mean it's not working. This is a long-term concept, you have to use it like every day, every week. Okay, besides the hour of the day, what is important in finding a support and resistance? And yes, of course, if you find support and resistance in those hours of the day, it automatically gives you a perfect trade setup, okay? So if the price reaches your support or resistance at let's say 5 o'clock in the morning, GMT plus 2, that shouldn't say much, So you can expect that support or resistance to be breached. So don't cry if you're losing on that. So try to understand these things, okay? Look at also at the hour of the day when the market shifts from bear to bull or bull to bear, okay? And this makes sense. Why? Because there are a lot of traders that are beginning their workday in London, okay? They're powerful. Just go with them. Understand what they're doing and do what they do. And of course, there are a lot of powers and a lot of traders. Another session when the US markets open, the New York Stock Exchange opens, okay? That would be like at afternoon here, GMT plus 2. Okay. The price action, we just kept talking about this. Yagub said many great stuff about price action, and I don't want to give you too many details because this is a lot talk on. So we'll have a special webinar dedicated on the price action because it's worth it, guys. Believe me, it's worth it. I love price action. Okay. Other things. Beware of the particularities of the market. Okay. What I'm trying to say here that if I'm sorry about that. If I'm look, I'm sharing. Okay, look here, the USD JPY. If we're looking at, look at this market. Okay, this is the daily market. Look at this market. So if it starts going, it goes. It doesn't come back. You probably think what I'm talking about. I'm talking about this. Look at this period here. Look at this period here. Okay, this is a daily chart. And just to show you my point, I will okay, and look at and look at Euro USD. You see, the trends, okay, they're clear, but there are lots of ups and downs. Okay, it's not like the USD JPY. Look, do you see the difference? I call this the market personality, the market structure, the market personality, because there are other traders involved here. It's just as simple. It's different. Okay. I hope you understand what I want to say. Look at this trend here. You see all these ups and downs here? Look, it's going down, but like a, look, it's very choppy. So you need to understand this if you're trading the euro dollar or the USD JPY. Okay? Okay, let's move on. And on this last 5 minutes, I guess I have another 5 minutes to talk. I want to share with you some tips when you're analyzing a market of course, talking about support and resistance. First of my tips is always look at the big picture, guys. Don't trade using the 5-minute charts, and don't look at the daily. Look at the daily chart. Look at the weekly charts. I've lost money because I didn't look. I was just hypnotized by the 5-minute chart. How much of a price action can you see in a 5-minute chart? 1 day, 2 days? So look at this. This is a clear downtrend, right? But if you do, but we're on a 1-minute chart. You definitely want to short this market, but you have to look at the big picture. Look where we are. Okay, this is different, right? Look, lows here. This is the 1-hour chart. So what is it here in green was the price action that I was previously showing to you, the 1-minute chart. That much. Okay, so basically, sorry, I wanted to sneeze. So basically, just look at the big pictures, okay, and see that I was almost trying to short in a support area. That's a dumb idea, right? But if you don't look at the hourly chart or daily chart or weekly chart, you can do that. Okay? Don't look at 1-minute and 5-minute charts only. Look at the big picture, guys. It will help you a lot. This, you probably think that these advices are very simple. Yes, simple, but it works. Apply simple things and you'll see that it will work. Just
simply great, right?
Yes. I was having a hard time when I'm a technical analyst, by the way. I'm in the Market Technicians Association. I'm a member of Market Technicians Association. And when I started in my first 3 years, I I basically tested all the possible technical analysis tools, all the indicators, all the Elliott waves. Okay, I'm not denigrating them, okay? But from my experience, I just came to the conclusion that what is simple is working. You don't need to go to college to learn these things. You just need to learn the fundamentals of the markets. Let's move forward. Okay, and another tip: watch out for the fake breaks, guys. How can you watch out for the fake breaks? First, look at the big picture. Okay, and try to get support and resistance from there. And second, look for confirmation. This is an example of the USD CAD. I made a good trade today and yes, Friday, Monday, and today, because the USD CAD. I will share my screen to you. Look here. I will share my screen. It's better like that. Whoa. Okay, can you see my screen? I guess so.
Yep.
Look here, guys. The market was heading very close to this level, which is, by the way, a round level, which will always have its importance in the forex market. What I'm talking about, round level, is like this: 1.3200. Okay. Well, calm down a little bit. Come on. Okay, something like that. Okay, but look here. What happened here? This is the weekly chart, by the way. Look what happened here, guys. Look how important was this in the past. Okay, first here, then here, then here. You see, it closed above that 1.32. Then here, it couldn't breach it. Here, every week had the support or resistance here. Here, and look what happened here when the weekly candle closed below the 1.32. You see, here it went another week. It dropped. So basically, it was an invalidated support that turned into a resistance. Okay, and to prove you that this is the correct thing, look when it came back. Look here. Can you see what I'm doing here? Yeah,
simple activity that can generate you great
okay, so you can
results.
see. Okay, that's why I needed. Look here. This is a pin bar. Okay, and look here. When we crossed above, we just rallied. So when we came back here, I definitely knew that's going to be some sort of an action here at around 1.32 level. Okay, so I just waited for this. This is a 1, 2, 3, 4, 5, 6, 7, 8 weeks downtrend. Okay, this is a rather long downtrend, and I was looking for a reaction, and I was looking for this level 132 because of what I showed you previous, because of this price action here, how the traders reacted to the 132 level there. Okay, and what I did, and okay, and look here what happened. This is the 1 hour chart. Okay, the support was here for a long time, here, and then here. Okay, this break, but not continuous. You see, this here, it broke the support here. This was the support here, and here it was broken. You see, but the bears did not continue their selling. So this was the first sign that this market is weak. This down market is weak. So what I did, this is the 132 level, you see here. And I sort of felt, you know, this is the price action, guys. I felt that it's gonna drop below 132 because there were stops to be taken out there. This is a game, guys. This is a game. You need to know how the others are thinking, how this market works. What I showed you was a fake break below the 132 support. Okay, the 2 or 3 hourly pin bars were created there, which confirmed that the reaction was there, was to follow. Okay, so this is it. And this I already told you about. Just try to spot the multi-level tested, the multi-tested level on daily and weekly. This is what I showed you on the USD CAD. You know, with the just go back a few weeks or more, and if you see that the price reacted at that level, you see, like in this case, you'll definitely have to expect some kind of a good action around that level. Trade those levels. So analyze the big pictures, and go and trade on the short term. This is what I do. Okay.
So for now, we appreciate your time. Appreciate you, Adrian, for the great insights that you shared.
Thank you, Jakub, for this opportunity. Thank you guys for attending this webinar. And wow, this feels great, sharing with you guys. And I'll definitely be waiting for you for other subjects, because I'll prepare some good stuff for you guys. Just
I know you will.
Keep an eye on your emails, and we'll definitely come with some goodies.